You have a quorum. Good
Hey,
morning.
good morning. I'd like to call the audit committee to order, and I'd ask the clerk to take a roll call for the meeting.
Yes. Trustee Michaud,
Yes.
trustee McMahon,
Yes.
trustee Riley,
Here?
trustee Martin,
Yes.
trustee McCarthy.
Here.
You're all set.
Well, thank you. And I'd like to remind the committee members, please keep your mics muted when you're not speaking. And the first agenda item for the meeting in tab 1 is the University of Maine's Department of Athletic agreed upon procedure report by Samantha.
Good morning, everyone. I hope you're having a great Friday. Nice turn in weather for October that it's 70 degrees this week. So every year we do an audit for our compliance procedures that we have here at the university, specifically in athletics. This year they looked at kind of 5 or 6 different things. So our academic performance program, so how we're monitoring student athletes, how we're progressing them with like progress towards degree, monitoring, making sure they're enrolled in the appropriate number of classes to participate in intercollegiate athletics. Our financial aid administration, making sure that we're awarding scholarships as the NCAA rules sees fit, making sure we're fitting within cost of attendance and kind of other areas. Our rules education, so every month we typically do rules education surrounding our coaches, and it's kind of a litany of different things. We try to keep it with like what's pertinent at the time. So for instance, October is usually around our national letter of intent program and official visits. So we try to keep it in that time frame. When we get to the summer, we'll do camps and clinics, vacation benefits, that kind of stuff. And then also we looked at extra benefits, student athletes' vehicles. So we internally have a form that student athletes fill out just to make sure that a booster is not paying for their car insurance or bought their car or anything like that. And they file that internally with us that we check on. Looking at their amateurism, so making sure all of our student athletes are cleared, did not compete professionally, anything like that. And then obviously lastly, our coaching staff limits and contracts. So making sure they have the correct number of accountable coaches, they're doing off-campus recruiting correctly, all that kind of stuff. So I will say this exercise is great every year because it kind of gives us an idea of like where there's some holes or where there's some things we can do better, what things we aren't tracking on, how we can make our processes better. So it's really helpful that we do have this audit every year and kind of look at different buckets, especially I'm sure you all have seen the climate of college athletics is a little bit turbulent right now with house settlement and everything else. So I will say there were a few holes in our recommendations. We did have a shift in employment. Our assistant director of compliance left. And once he left, we realized there was a few things he was not doing, which we have since righted. We've currently hired a third-party contractor. It's called Fortify College Athletics to help with some of our bigger NCAA matters, waivers, rules education, violations, anything like that. And then we can, it allows them to kind of focus on sport specific, especially the rules education piece. So they specifically, football has their own set of rules, hockey has their own set of rules, basketball has their own set of rules. So we hired this party to kind of help with that rules education piece and have more one-on-one contact with our coaches. We also are in the process of updating our overall policy and procedure manual for the Department of Athletics. And compliance kind of will be next. And then our compliance coordinator actually put together kind of like a slide deck of all of our policies, procedures, how our coaches need to do things, like how to request official visits, anything like that. And then with the off-campus recruiting piece specifically, we implemented this year a 3-strike policy with our coaches. So we hired our new director of compliance services who oversees that that off-campus piece, and then basically monitors it with expenses in the business office. And if our coaches are not reporting or not uploading their off-campus recruiting activity, they get a 3-strike. You get 2 warnings, and then the third is either a financial penalty for their sport program, or we have threatened to take away recruiting days from them as well. So we've really kind of ramped up a lot of what we're doing here, especially now that we are full staff. And then especially now that we're hiring an outside consultant to kind of fix some of these recommendations that Withium gave us.
Great. Thank you. Are there any questions for Samantha? Trustee McMahon?
Thanks, Samantha. What's the approximate cost of the consultants that we've hired?
I'm not sure of that off the top of my head, but they do two kind of audits every year. They do us in compliance, and then they do an overall financial audit of our business office every year. So I believe, I'm not sure of the cost, but there's kind of like a 4 or 5 year contract that we've entered in with them. So they were formerly O'Connor and Drew that we had, and now they're Withium. I will say, moving forward, the NCA has required with the new holistic student athlete model that we're going to have to do at least a compliance audit every 4 years. So we're kind of like ahead of the times that we do it every year as a checks and balances.
Can I just chime in? Trustee McMahon, we'll get that cost for you.
Thanks, Jim.
Mhm.
Any other questions? Don't see any. So thank you very much, Samantha. Really appreciate it.
Thank you. Have a great day.
You too. Moving on to tab number 2, the audit committee work plan for fiscal year 2025. Tracy?
Thank you, Chair Michoud. The fiscal 25 work plan is an information item, as you know, and will also go to the November board meeting. The committee typically meets twice a year with a fall meeting, including 3 items. The humane agreed upon procedures report, which you just heard and is required for Division I programs. The second is the presentation of the university's annual financial report, which Darla Reynolds, Director of Accounting, will cover today. And the third item is the external auditor's report, which includes communications required by accounting standards, comments regarding the audit and financial results, and discussion of any accounting standards changes that are on the horizon. The spring agenda typically includes 4 items: a review of the results of the federal funds single audit, external auditor comments about that report, including any findings and corrective action plans. And the external auditor also provides their required communications to you, the audit plan for the upcoming fiscal year, and any emerging accounting standards changes again. And finally, the humane Director of Athletics also presents any agreed upon procedures reports that have since been completed for financial or compliance matters. Happy to take any questions.
Okay. Thank you, Tracy. Any questions? Seeing none, we'll move on to tab 3, the annual financial report, which will be presented by Darla Reynolds.
Thank you, Chair Michoud, and good morning, everyone. And I'm pleased to present the 2024 annual financial report. And that full report is in tab 3.1 of your materials. And it is in draft status at the moment, awaiting board approval later today. And for ease of discussion, though, I'll be speaking from the PowerPoint presentation that's in tab 3.2, and I'll share that in a moment on my screen. But before we get started, I'd like to extend my appreciation to our auditors and also to all the campus and system personnel who responded to our many, many data requests. Each year, a lot of time and energy goes into closing the books, going through the audit, preparing the financial statements. And of course, our requests don't always come at the most convenient of times. So thank you, everyone, for making them a priority and helping us to get to this point here today. I also want to thank my staff for all of their hard work in helping us get here. And I especially want to thank Janice Elsmore, the Assistant Director of Accounting. Janice, again, led the audit for the system and prepared the bulk of the financial statements that are in the materials. And with that, I will share my screen. And hopefully you can see the PowerPoint presentation.
Yes.
Okay. And on page 2, you see today's discussion topics. We'll spend most of our time on slides 7 through 10, which cover the system's financial results for FY24 and also financial position at the end of the fiscal year. And on page 3, you see the 3 sets of financial statements that are required to be included in the annual report. Each set represents or a separate unit upon which the auditors provide an opinion. And speaking of opinions, on slide 4, we see the results of the audit opinion. This isn't, I didn't include the full audit report, our auditor's report here, but it does include an unmodified or what we call a clean opinion. And that opinion is actually still in draft status, pending final review by the auditor's quality review team. And I'm sure Mike Jones will update you on that later in his presentation. But if you are interested in reading the full independent auditor's report, it's about 3.5 pages, and you can find that beginning on page 7 of the annual financial report. Now, moving to page 5, I've noted new items for FY24, and technically, GASB 94, covering what we call P3 agreements, isn't actually new for FY24, as we did implement it in 23 as required. However, it had little impact last year. The impact on FY24 is the addition of a $24 million capital asset in offsetting deferred inflow of resources as the boutique hotel P3 arrangement between UMaine and a third party became operational during FY24. Now, the deferred inflow for this agreement will be amortized and recognized as part of non-operating revenues each year over the 99-year life of the P3 agreement. On page 6, I've provided this type of illustration in prior years, and it just gives you a sense of how much the system's other post-employment benefit or OPEB plan or health plan is impacting various lines of the financial statements. And I'll just point out 2 lines. First is the net OPEB asset line. We have a net asset again at the end of FY24 related to OPEB, meaning that the OPEB trust, the assets in that trust exceed what the OPEB liability is to the tune of $34 million at the end of 24. And the other line I'd point out is OPEB's impact on net position. It's a net increase of about $6 million, with an increase occurring in restricted expendable net position and a decrease of $7 million occurring in unrestricted. And with that, we'll jump into the financial results for the system for FY24 on page 7, looking at the statement of revenues, expenses, and changes in net position, which we fondly call the SHRECNIP for short. And as required by accounting standards, we presented the system's revenues and expenses in 4 different categories. Operating revenues and expenses that you see here on this slide. And in an upcoming slide, you'll see sections on non-operating revenues and other changes in net position. Now, going directly to the subtotals on this page, we see total operating revenues of $511 million, less operating expenses of $850 million, for a resulting operating loss of $339 million for FY24. And as you can see, that's an improvement from the prior year. And as I've noted in prior years, under current accounting and reporting standards, the system's operating expenses are always going to exceed its operating revenues. And that's because there are certain key revenues that the system relies on to fund operations that GASB doesn't allow us to report as operating. Instead, we have to report those as non-operating. And we'll see those later on slide 9. But moving back to the top of the page, again, the total operating revenues of $511 million. you see that they increased 10% or 46 million from the prior year. And 2 points of good news related to operating revenues. First, we had increases in all revenue lines under this section. So in prior years, there's been lots of decreases or some increases and some decreases. So it's nice to see them all increase. And the other thing I would note is that net student fees increased nearly $12 million. And that's after having decreased by that same amount, moving from FY22 to FY23. So we've recovered what was lost last year, and hopefully we'll see continued improvement in that line. And for federal, state, and private grants and contracts, the $24 million increase in that line represents over half of the increase in all operating revenues. And I'd point out that 10 million of the increase is related to the Harold Alfond Foundation Award that's supporting the UMS Transforms initiative. And as we do for other grants, we recognize revenues from the Harold Alfond Foundation grant to the extent of related expenses each fiscal year. And we report the revenue as either operating revenue here in this section if used for non-capital purposes, or as part of other changes in net position if used for capital purposes. And as you may recall, the award from the Alphons covers a wide range of items, including capital construction for the engineering area and primarily athletics, and lots of operational costs as well. Now, looking at operating expenses, we see that they increased $40 million or 5% from the prior year. And a major driver in this increase is the $24 million increase in grant revenues that I just mentioned. Again, grant revenues are recognized to the extent of expenses. And other factors include negotiated across the board compensation increases and, of course, inflation, to name a couple. Before leaving this page, I'd touch upon two variances. First is the decrease in instruction expense, which is expected after the special retirement incentive that was offered to faculty during both FY22 and FY23. And second is the $8 million or 15% increase in operation and maintenance of plant expense. 46% of this increase is associated with non-capital construction projects at UMaine. And then moving to page 8, we again see the $850 million of operating expenses, but this time on a natural classification. And we can see that nearly $28 million or 70% of the overall increase in operating expenses is related to the supplies and services line. Now, again, the increased grant activity that I just mentioned and the increase in non-capital construction at UMaine play into this increase. And another $9 million of the increase is associated with outsourcing UMaine's dining operation to Sodexo. As you may recall, UMaine entered that contract halfway through FY23, whereas FY24 includes an entire year under the contract. So the cost would be increased for supplies and services. Now at the top of page 9, we again see that same operating loss of $339 million that we saw at the bottom of page 7. And also here under non-operating revenues, we see those key revenues that help to fund operations, but again, that GASB requires us to report as non-operating. And if you apply those revenues against the operating loss, we see that the system had income before other changes in net position for FY24 of $8.2 million. And that's a significant improvement over the $23 million loss that we had in 23. Now, good news related to the non-operating revenues is that increases in non-capital state of Maine appropriation and in investment income a combined total increase of nearly $21 million, which accounts for 84% of the overall increase in non-operating revenues. Now, remaining on this page, we drop down and look at other changes in net position, which totaled $74 million for FY24, and that's up 19 million or 36% from the prior year. Now, revenues in this section support additions to things like capital assets and endowments and the reduction of debt, items that you would see on the statement of net position rather than here in the SRECNIP. And revenues in this section tend to fluctuate significantly from year to year. For example, state of Maine capital appropriations revenue is dependent on the availability of funding and the timing of expenditures of those funds. And as you can see, this line decreased from the prior year as fewer of those dollars remain to be spent. The $20 million increase in capital grants and gifts is primarily related to an increase in gifts raised for USM Center for the Arts construction project and an increase in gifts raised by UMaine Athletics as part of the required match for the Harold L. Fond grant. And endowment return is, of course, dependent on market performance, which we've seen fluctuate significantly over recent years. But I would note that FY24 does mark the second year in a row of positive endowment returns and increased returns. So hopefully that's the new trend. Moving to the bottom of the SRECNIP, we see that all of the financial activity that we've just discussed results in a change in net position, an increase of $82.3 million, up from the $31.4 million in FY23. And this change in net position will carry over to the statement of net position, to which we'll now turn. And we'll focus first on assets and deferred outflows of resources. Now, at June 30th, 2024, the system again had good liquidity with $266 million in cash and operating investments. And these items account for 73% of the system's current assets. So it's quite liquid. And during FY24, the system experienced $21 million of positive investment returns from these assets. And that investment return was reported as part of non-operating revenues back on the SRECNIP. Now, moving down to non-current assets, we said that they total just under $1.3 billion at June 30th, up $92 million from the prior year. And I'll make 3 points related to non-current assets. First, deposits with bond trustees decreased just under $22 million as the system continued to spend proceeds from the university revenue bonds that it issued back in FY23. And I would just point out also that in this section, you see that net OPEB asset of $34 million that I mentioned previously. And third, capital assets net of accumulated depreciation increased $81 million. And that's the net of $139 million of new capital investments, less an increase in accumulated depreciation of $57 million and $1 million worth of asset disposals. And included in that $130 million of new investments is the $24 million boutique hotel asset that was, again, acquired through UMaine's P3 agreement. And dropping down to deferred outflows of resources of $6 million, as shown back on slide 6, the change in this line is primarily related to the OPEB plan. Now we'll turn briefly to page 11 with liabilities. And if you look 3/4 of the way down the page, $468.7 million. Total liabilities are basically flat with the prior year. And looking at the next line down, whoops, sorry about that. Deferred inflows of resources increased $15 million, and this is the net of a $13 million decrease, again, related to OPEB, and a $28 million increase related to UMaine's P3 agreement for the hotel. Now, looking at the bottom of page 11 and looking at the variance column and the line for total net position, you see that $82.3 million increase in net position that was at the bottom of the SHREC. And with that, it brings the system's total net position at the end of FY24 to just under $1.1 billion. And as you can see on this slide, net positions comprised of 4 categories. I won't go into the descriptions of these, but if you'd like to read the descriptions, they are on page 49 of the annual report. But I do want to make a comment on 3 of the lines under this section. First is a nearly $60 million increase in net investment in capital assets. This differs from the $81 million increase in capital assets that we talked about a moment ago. And that's because that increase is offset by related debt to arrive at the net position associated with those assets. The second line I'll mention is the $34 million increase in restricted expendable net position. 13 million of the increase relates to the increase in the net OPEB asset, as that asset is restricted for health costs, so it's part of this restricted expendable line rather than unrestricted. There was also a $9 million increase in the expendable portion of endowments, another $9 million increase in unspent restricted gifts, and then $3 million associated with various other restricted funds. Now, the last item I'll mention is unrestricted net position, which had a decrease of $12 million. This category is not subject to externally imposed stipulations. However, the resources are critical for the system's financial stability, and management has designated them for various purposes, and those you can find on page 12. I'm not going to turn to that page, but would entertain any questions you might have on that in just a moment. And the decline in unrestricted net position is the net of multiple items, including return on unrestricted operations, payment of principal on long-term debt, and nearly $15 million invested in capital assets, to name a few. And with that, over on page 13, or beginning on page 13, are the financial statements for the system's fiduciary funds. The statement of fiduciary net position here on page 13, and then pages 14 and 15 show the changes in fiduciary net position. And with that, that's the end of my presentation, and I'd ask if anybody has any questions.
Thank you very much, Dal. Appreciate it. I just have a couple of questions, and that pretty much relates around the federal CDS funding that's we're fortunate to get. And I should have asked the other day, but I forgot about it. How does the university ensure that when you look at the final management systems how do they comply with the requirements of the uniform guidance for the federal awards? I believe it's 2 CFR Part 200.
Certainly, the 2 larger campuses have offices. UMaine and USM have offices with staff that are dedicated to monitoring the various federal funds and ensuring compliance. And the smaller campuses, well, I believe several of the smaller campuses have actually outsourced to UMaine for some of that type of work. And there are, of course, conferences and things like that where they can stay abreast of whatever changes there are in regulations. And there's staff that, look at the requirements, and I believe President Brini Mundy would like to comment as well.
Yeah.
Thanks. Darla gave a perfect answer. I would just, to be specific, there are 2 UMaine offices that are critical to the compliance with the guidance. One is the Office of Research Administration, which does post-award management and review. And the other is our Office of Research Compliance. And both of those offices are charged to stay completely current with federal guidance and to do review as needed. And indeed, some of the other campuses come to us for help on that.
Yep. And how do you do, Madam President, how do you make sure that your subrecipients of the fund, the contractors, how do you make sure that they're complying with
Right.
federal
So
reg-
as you know, those rules vary a little bit by agency. And so we again have people who are familiar with the different funding organizations and then who follow up with subs as appropriate. I can get more detail on that. I don't know the particulars, but we're aware that that's a big responsibility.
Yeah, yeah, I know it is. That's why I just
Yep.
kind of curious, on, particularly with
Yeah,
all the
we-
grants, it's good that you're getting them. So,
Well, thank you. We have strong staff there, but I'll find out a little more about the details of how they work with the subcontracts.
okay, great. Thank you. Chairwoman Riley.
I don't mean to, I thought you had a couple of questions, but I'm sorry not to have brought this up under the work plan discussion, but I wonder if we need to put some specific activities for this committee, given that this is also the risk management committee, around issues to make sure we understand the resources needed to do the kind of management of the research and the AI. There's so many emerging issues. I wonder if that might not be, and I'm sorry, I don't want to take time now, but I wonder if we want to put a little earmark on that and to think about more work for this committee, Chairman.
No, I think that's a great idea, because when you look at the risk management, particularly all the money we're getting from the feds, there's a lot to it and a lot of regulations, and it's when you deal with the subrecipients to make sure they also comply. So, no, that's a good idea.
Thank you for that suggestion. I'll add that to the work plan that will go to the November meeting. And a reminder, we used to do that with this committee. Gretchen had some changes in some staff, and she asked for a little bit of a pause about that. So I will check in with her and add that back to our plan. Thanks.
Great. Any other questions? Yes, Trustee McCarthy.
Thank you. And Darla, thank you for the presentation. You'd mentioned you're willing to go over the unrestricted a little more. I'd love to understand kind of what was in that bucket for the unrestricted numbers, and or like what drove the sort of 11 or $13 million delta from year to year.
Let's. I can find my share button again. Yes, so as you can see here, the unrestricted net position is made up of a variety of categories, with the educational and general reserves and then the auxiliary reserves being what drive most of the funding for the day-to-day operations for the universities. And and we have various pools, like some of our insurance is self-insured, so we have a risk management pool. So we've got money set aside to help the campuses with certain claims and losses. The budget stabilization that gets discussed each year with the E&G budgets that you approve, whether there's a need to dip into that to help a particular campus balance their budget, the benefit pool carryover. And then as there are a variety of internal designated projects that the campuses may have set money aside for, sometimes that's, if a faculty member or researcher doesn't have an external grant, then a campus might provide them with some startup funds or a small amount to do a small internally funded research project. And then, of course, the corpus of the money that was contributed to what we call our quasi endowments the donor gave money to the university made the decision to endow it, so it's considered a quasi endowment, and it is expendable. And it's either for restricted or unrestricted purposes, depending on what the donor had said. And then, of course, the endowment appreciation on what are called true endowments. So the donor says, here's $1 million, you have to keep that intact, you can spend the earnings. I'll let you decide what you want to spend it on. So that's the type of appreciation that's in that particular line. And then the cost sharing and other, it's, if there are cost sharing requirements for all of the grants that we have, sometimes, if a department has extra funds and they know that they're going to need to cost share X amount over the next couple of years, they may set that money aside at the beginning of this year and just set it aside for that. So that's in this particular line item. So within the SHRECNIP itself, you see the results of all of the systems funds. So whether they're funds that are unrestricted, like the E&G dollars, tuition dollars, investment income, things like that, as well as the restricted funds. So it's all together. And so sometimes there are resulting increases on the restricted side of the house, and decreases in net position that's unrestricted. And again, factors going into that are results from operations, which the trustees see on a regular basis from Ryan and Miriam on how those are going. And then, of course, if a campus uses a certain amount of unrestricted funds for whether it's a capital construction project, then that will pull down. That particular type of item would pull down unrestricted, but it would build this net investment in capital assets line. So it's
Right.
just a shift between
Great,
the two buckets.
thanks, Darla. That's really helpful. And a follow-up that I don't need an answer for right now, but I'm just curious, like what the trends look like over the last 4 or 5 years in this line, and just sort of, does it fluctuate around this number? Or has it been going down? Has it been going up over time? But you don't need to answer that now, but I'm just curious.
I'll get that information to you. Yep.
Thank you, trustee. Any other questions? Comments? Seeing none, I'll read the text of the resolution. That the audit committee forwards this item to the October 25th, 2024 special board of trustees meeting for approval of the following resolution. That the board of trustees accepts the recommendation of the audit committee and approves the fiscal year 2024 annual financial report as presented. Are any questions? Discussion? Can I have a motion?
So
So
moved.
Moved by trustee McMahon. Is there a second?
Second?
Second by trustee Martin. Have the clerk call the roll.
Trustee Michaud,
Yes.
trustee McMahon,
Yes.
trustee McCarthy,
yes,
trustee Riley,
Yes.
trustee Martin,
Yes.
the motion carries.
Thank you. Moving on to tab number 4, the auditor communications to the audit committee, and Michael Johns and Brian Crowley will be presenting.
Good morning, everyone, and thank you for having us. I have a presentation and will attempt to share my screen. But for a reminder, those of you who maybe I haven't met, my name is Mike Johns. I am the principal of CLA on the annual audit engagement. I'm joined with Brian Crowley, who is the manager on the engagement, and this was his first year working on the University of Maine system. So thank you for having us. Can everyone see my screen?
Yes.
Okay. So what are we here to do today? We're here at the conclusion of the audit process, and we're here to talk about what did we do? What were the results of what we did? what kind of reports are we going to issue, and what steps it's going to take to finalize the audit engagement, and then some potpourri of just a little bit of compliance and some new standards that we see coming down the pike. So what was our audit scope? What were we engaged to do? We were engaged to express an opinion on the financial statements for the fiscal year ended June 30, 2024. Those financial statements are prepared by management, and management is responsible for the fair presentation of those financial statements and related footnotes. So management does a closing process. They prepare those statements. CLA is then engaged to come in and perform tests of the balances, transactions, and statements themselves to enable us to express an opinion on management's work. Other deliverables that are a result of the audit process are a formal letter to this group charged with governance, and those are general communications that our auditing standards require us to make, and I will go over them in today's presentation. If we come across any what we define as significant deficiencies or material weaknesses within the internal control structure, those would also be required to be reported to this group. And as a little bit of the conversation earlier was talking about the uniform guidance, and with the uniform guidance, we are engaged to do the federal single audit, which is not a part of this presentation. It is ongoing, and we will provide a update as to where we are with that compliance audit process. So the audit process, if you go to the very crux of it, we're required to do what our standards define as a risk-based audit approach. And what does that mean? That means that we're required to take a step back, look at the higher education industry, look at what's going on specifically at the system, look about what's going on in the overall economic environment that the system participates in. And based on our industry knowledge, our knowledge of the system, come up with a risk assessment or a heat map of if something were to go wrong, whether due to mistake or error or fraud, where is there a higher risk that would occur? That risk assessment process is an iterative process. So as we progress in our audit, that can change if we discover items or facts we were unaware of with the initial assessment. And the risk assessment guides us to spend more time where there's more risk. So areas we perceive as having higher risk, our procedures would be tailored appropriately compared to areas where there may be a lower risk where we would spend less time and effort. So for an example, revenue recognition would be a higher risk. Was revenue recorded in the proper period? For those grant revenues, were the eligibility requirements met? Were allowable costs incurred to enable us to recognize that revenue? Was cutoff done properly? A lower risk audit area may be, for example, prepaid expenses, which the most common example is for, say, prepaid insurance, where it really doesn't fluctuate much year over year, and it's a simple calculation. Some of the areas that we focused on, and this is not an all-encompassing list. There are certainly other procedures and areas we performed audit procedures over, but just as an example of some of the procedures we performed in the more risky areas, internal controls is one of those areas. We performed tests of internal controls over the non-exchange revenue cycle. That's the grants, government grants, local grants, and contracts. We performed tests of controls over the disbursement cycles of both payroll and general disbursements, or the accounts payable cycle. However, we do not express an opinion on internal controls. We do those tests of controls because of the nature of the transaction cycles, with the number of transactions flowing through there. We need to be comfortable that the internal controls are operating as designed, but we do not express an opinion on those controls. That only happens in a public company audit or the Sarbanes-Oxley world. That does not occur outside of those standards. The general ledger, we get a very large data file of every transaction that occurred throughout the system for the fiscal year. and we download that into our software. And the purpose of that is to perform some data analytics that helps us further narrow our risk assessment. So we use our software to look for anomalies or things that have changed from the prior years that would guide us to what we may want to then audit a little closer compared to prior years. So these are thousands and thousands of transactions that we interpret, take a look at, and see if there's any fluctuations we need to understand better. That process also gives us a base for testing of what we call manual journal entries. So those will be journal entries made by management that are not automated. And that's always an audit risk because there's always a risk of management override of controls via the use of journal entries. So we look for descriptions of those journal entries, dollar amounts related to those journal entries, debits and credits to accounts that may not seem normal to us. And that's how we make a selection of journal entries to test. The system's financial statements include various accounting estimates. Because they're estimates due to their nature, facts and circumstances could change in the future that could significantly impact the valuation or the dollar amount estimated at fiscal year end. Some of the more significant estimates within the system's financial statements are those pension and other post-employment benefit liabilities. Those are actuarially determined, and we look at the inputs that go into those actuarial studies and perform some use of a specialist procedures, as well as testing the census data of the employees that are eligible for those benefits. Other estimates in the financial statements include allowances for uncollectible accounts receivable, some insurance liabilities related to claims incurred but not reported, the depreciation expense taken on the capital assets. So we're required to perform procedures over those estimates, and based on our audit procedures, we didn't see any indication of management bias or anything along those lines, and they appeared reasonable. The process to estimate them appeared reasonable and comparable to those of prior years. Investments are required to be reported at fair value at year end, so there's a lower risk for the investments in common stock that anyone can go to the internet and get a fair value price for. However, the system does hold some alternative investments. Those investments are reported at net asset value, and that takes a little more from an audit standpoint to get comfortable with the valuation there. We actually use a third-party specialist to look at the audit reports of those investments as well as market conditions to develop an independent estimate. And then we compare that to what the investment providers provide the system at year end for fair value, and didn't have any issues with that. Unpredictability: each year we're required to perform certain procedures that we haven't performed in the past. And that could be changing our sample sizes. That could be looking at an area that maybe isn't overly material to the system, or could be looking at just a process or internal control procedure. I already talked about revenue recognition, but we do spend a significant amount of time there, especially on the grant side and appropriations side. And when we perform some detailed testing where we're looking at the grant agreements, the allowable expenses, and compare that to the revenue that was recognized for the year. On the expenditure side, we do those tests of controls and didn't come up with any observations or indications that the controls were not operating as they're designed. And then we perform various analytical procedures, ratio analyses, and looking for trends that are unusual. And if we do identify those, digging into the details behind that. We do confirm debt at year end and make sure that there are no non-compliance issues as it relates to the debt outstanding at year end. On the liability side of the statement of net position, we look mainly at the assertion of completeness, making sure that the liabilities that are reported are complete. And we do procedures to test that, such as looking at expenditures in the next fiscal year and making sure that if the related service or good was related to the fiscal year under audit, that there's a liability recorded for that if it hadn't been paid at fiscal year end. For the capital assets, we sample the additions for the year. So we look at last year's balance and then you add your additions, have some deletions. We sample the material additions for the year by looking at the cash disbursement and the vendor's invoice, making sure that the amounts agree and that the item does meet the definition of a capital asset. And that is a significant balance on this financial statements. So before I put anyone to sleep, I'll get out of the audit approach and move on with the presentation. As Darla does, she stole the thunder. You got the answer before we asked the question, but the results of all of our procedures are going to enable us to express an unmodified opinion. That's the highest level of assurance we can provide as independent CPAs. And that states that we did not identify anything in our testing and procedures that caused us to believe that your financial statements are materially misstated. I use the word materiality because we are required to do that. We calculate that based on your total revenues, your total assets, and other benchmarks. We have to use a concept of materiality because if not, we'd be auditing every transaction that occurred during the fiscal year, and we'd still be there right now looking through papers and systems. So we do have to use that concept, and we audit to those materiality numbers. We calculate 4 different levels of materiality, the highest being what is an error that we don't think the financial statements would be fairly presented if it exceeded that amount, and the lowest being, okay, this is a trivial amount. Anything we notice below this amount wouldn't need to be reported to governance or go any further with our auditing procedures. On the internal control side, again, we're required to report if we identify any material weaknesses in the control structure. We define a material weakness as there is not a control or it's not operating effectively to prevent or detect a material misstatement. And we define a significant deficiency as a deficiency less severe than a material weakness, but warrants the attention of this group of governance. And we, based on the procedures we performed, we did not identify any deficiencies in internal controls that we consider to be material weaknesses or significant deficiencies. Oops. Those required governance communications that I alluded to, and there is a formal letter that documents this that will be signed at the end of our audit. But just to go over it briefly with this group and address any questions, there were no changes in the scope of our audit. What we were engaged to do and the plan we presented did not change throughout the course of our procedures. There were no significant new accounting policies or standards that were adopted this year. So the rules that were in effect on the statements that you looked at last year are the same rules in place this year. We do audit the footnotes to the financial statements, and we didn't identify any issues with those procedures. We find the disclosures to be neutral, consistent, and clear. Management was well prepared at the beginning of our audit. We start really the nuts and bolts of the audit at the beginning of September. And management provided us a trial balance that was in good order, and you'd be surprised to see our request list and how long it may be. And they were able to get us off to a great start when field work was scheduled. So I'd like to thank management for being prepared. That's certainly not always the case. It is a monumental task to close the books and records of an entity this large. And it speaks volumes to say that the trial balance we received in the beginning of September is what you're seeing in the final financial statements. The numbers hadn't changed because we didn't have any material audit adjustments. So that speaks well to management's efforts and as well as your internal control policies and procedures. We didn't have any disagreements with management during the course of our audit in terms of accounting treatments and or auditing procedures, nor are we aware of management consulting with another outside CPA, what's commonly referred to as opinion shopping. So I already went over the estimates, so I don't think I'll go over those again, other than to reiterate that we were comfortable with the estimation processes that management made and the resulting amounts at fiscal year end. There were no uncorrected misstatements. So sometimes we'll come across an error, and for various reasons, management will decide not to book that. But we did not have any of those in the current year's audit, and no audit adjustments, which was going back to my statement on the trial balance. At the end of our audit, management will provide CLA with a representation letter. It's a 4 or 5 page letter, and if you cut to the chase, really what it says is the responses we gave you and the information we provided you is correct and accurate to the best of our knowledge. The uniform guidance audit, or what we refer to as the single audit, is in process. We have 3 major federal programs that we are testing this year. It's called the single audit because the federal government puts out rules as to how an auditor needs to select what are called those major federal programs. And when you have a major federal program, it requires that that program be audited in accordance with their annually issued compliance supplement. So the major programs this year for the system are the Student Financial Assistance Cluster, the TRIO Cluster, and the State and Local Fiscal Recovery Funds. So that audit is in process. As you approved the agenda earlier today, we will report out on that process at the next committee meeting. And to date, we have no significant findings are issued, but there's still a decent amount of compliance testing to be done. We have made some good, significant headway on the Student Financial Assistance Cluster, which is by and large the most complicated of the major federal programs, and what the Department of Education asks us as independent auditors to test the most. Accounting and regulatory matters. What we've seen in the past couple of years is that compliance supplement I alluded to as it relates to student financial assistance has been growing and growing and growing, where most other federal grants, they've actually been shrinking and focusing the audit procedures. And from what we're hearing, we're expecting more procedures to be added next fiscal year as well. It seems that the department identifies items each year that they consider to be direct and material to that administration of that program. And they're really diving into areas that you wouldn't think of. So when you think of student financial assistance, you would think, okay, the auditor needs to test the student's eligibility to receive the funds they're getting to apply against their tuition and charges. But we're testing a lot of other compliance type attributes. For example, IT policies in the Gramm-Leach-Bliley Act. In the future, we may see, and we're hearing that we may see testing of security reporting, recording of incidents to the Department of Education. So more compliance is coming, and they're asking us to test more compliance, and we'll see if that changes after the election, but right now that's what we're anticipating. They did put out some final rules this year. I think there was more of a stir in the private higher education side of the fence than on the public side, that they're required to make some new disclosures and new calculations. But they did provide some final rules on reportable events that management is aware of, that if certain things happen, they need to be reported to the Department of Education within a 60-day window. These are mostly financial events, or events that could impact the financial stability of an institution of higher education, such as missing a debt service payment or borrowing from an employee benefit plan, as 2 examples of events that, when they occur, need to be reported to the department. For next fiscal year, we do have a new accounting pronouncement to adopt on compensated absences. So that would be when employees earn benefits based on the work they perform to be paid at a later date. The most common examples are your vacation pay or sick pay. And the GASB, really what they're doing is clarifying which types of benefits do and do not need to be accrued for, and making the procedures a little bit more precise on how to calculate that liability at a fiscal year end for financial reporting purposes. When I read the standard, I don't see too much there that I think there'd be a huge impact on the system. And compared to the liabilities they're currently reporting, but you don't know until you go through the process and examine all of your employment agreements or policies and procedures, and making sure that what you're calculating now adheres to the new standard. In 3 years, there's a new financial reporting standard that's coming out, and that will change the geography a little bit of how the statement of revenues and expenditures and changes in net position are shown. It's more of a year-end type exercise, not that any of the rules on how you record a transaction or make an estimate are changing. It's more just the presentation of the annual financial statements that you're reviewing that draft of today. They're also putting a bunch of new rules in place over what the management's discussion and analysis should and should not include. And the main crux of them wanting to issue this standard is just making sure that these documents are as useful to the users as possible and are consistent across the entities. So steps to finalize the engagement. As Darla mentioned, we are in our quality review process, and I expect sign off on that hopefully today, but Monday at the latest, at which time we will address any of their questions and then perform what we call our subsequent events review. So since we left the field and through the date of our audit report, we're just required to perform some procedures to make sure nothing occurred that we're not aware of that may need to be disclosed in the financial statements. And once those are done, management will sign the representation letter and we will issue the signed audit report. The due date to the state for that report is October 31st, and we will be meeting that deadline. There's a QR code. I think you have this in your materials. Each year we do host a higher education virtual conference over 2 days. There are topics in there that are not just accounting related. I think we only have 1 of 8 topics on accounting and compliance. So give it a scan. There may be some events you may want to take a look at and hear about trends in the education industry. And we also have external speakers from different institutions of higher education. So thank you for your time this morning. Thank you for management for all your cooperation and hard work. And we would be more than happy to address any questions anyone may have.
Thank you very much, Michael. Appreciate it. Are there any questions or comments? So you did such a thorough job, Michael. Trustee McMahon?
Mike, thanks very much for that. Just to sort of set the stage, about what percentage of the audits you do, you get a trial balance in September for a June 30th year end, which is the final balance that you use. So how unusual is that in the scope of the audits that you do across the academic system?
So I wouldn't say it's unusual in that it's a very low percentage, like down below 10%. If you force me to a back of an envelope type calculation, I would say probably more than 60% have at least one audit adjustment. So at the system levels, obviously that ratio changes when you get down to smaller private institutions or community colleges. But I would say you're in the smaller minority, but not unheard of. And it's, again, a very good compliment to management.
It's an excellent compliment to management, which, and I'm very pleased to hear that. And Tracy and Darla and your staff, you really do deserve some excellent credit for that. Thank you.
Thank you for those comments. We appreciate them.
Thank you. Any other questions? If not, could I have a motion for the Board of Trustees committee meeting to go into executive session under the provisions of 1 MRSA section 405(6)A to discuss the evaluation of personnel and the consideration and discussion of appointments, employment, duties, and 1 MRSA section 405(6)C to discuss the conditions, acquisition, and disposition of real property or economic development if premature disclosed of this information would prejudice the competitive or bargaining position of the university main system.
So moved.
It's been moved by trustee Martin. Is there a second?
Second.
Second by trustee McMahon. Beth, would you call the roll?
Yes. Trustee Michaud,
Yes.
trustee Riley,
Yes.
trustee McMahon,
Yes.
trustee McCarthy,
Yes.
trustee Martin.
Yes.
The motion carries, and I will move you into executive session.
Thank you. Well, since we've all concluded our work, we need no motion to adjourn, and we have a special board meeting at noontime.
Great.
So
See you
we'll
then.
see you shortly. Thank you.
See you in
Take
a little
care.
bit. Bye-bye.
Thank you.